There are not a lot of things that you can guarantee in this life, and people always joke that the two things that you can guarantee are death and taxes. But believe it or not, there is a third thing that you can guarantee in this life, and that is retiring as a millionaire. And that is all thanks to something that Albert Einstein has called the eighth wonder of the world, and that is compounding interest. Now, I think we all know that we should be investing for our future and for our retirement. I think it has been ingrained in our head by everybody older than us that it is something that we must do. But the wonderful thing that a lot of people tend to leave out is that you can guarantee yourself that at some point in this life, you will be a millionaire. And it comes down to simple math and to picking the right investments. Now, what I want to do in this video is tell you three very simple investments that we can all put to work in our life to help us get as close to guaranteed as possible as retiring as a millionaire. Now, these three investments are nothing fancy. We will not be talking about cryptocurrency or Bitcoin or foreign exchange or wine. We will be talking about investments that each and every single one of us can put to work in our life. Now, I don't think I have to say this, but I'm going to say it anyway. This is not financial advice. You should always do your own due diligence, and you should always confirm with a financial advisor what I am saying. Now, let's get right into it. As always, my name is Derek, and I got my degree in finance, so you don't have to. Let's talk about three very simple investments that you can put to work in your life right now to help you retire a millionaire. Now, the first one that I think most people know about is the stock market. But when people say that we should invest in the stock market, that leaves room for a lot of interpretation. And I think if you would look at 100 people's portfolios, they would be all over the place. And a lot of them might not be actually optimized to retiring as a millionaire. Now, if you want to retire as a millionaire, you have to have what is known as a broad-based market tracking ETF in your portfolio. Why? Well, for a very simple reason. This historically has given us some of the highest returns available with some of the lowest risk out there. Now, of course, every single investment has risk, but when you look at the history of the overall stock market, it has always been here and it has always gone up. And I like to joke around and say, if the stock market in 50 years from now is not higher than it is now, then we probably have bigger problems on our hands and money might not even be worth anything. So you can almost certainly guarantee that when you retire, whether it's in 10, 20, or 30 years, that the stock market will be higher than it is now. And that also means that any broad-based market tracking ETF should also be higher than it is now. Now, the one thing that we have to understand when it comes to this is that time is your friend. And the more time that you have, the better, because the market does swing. And a lot of the times the market is lower than it is at its all-time high. That is okay, because when you look at it on a historical basis over long periods of time, that is when something amazing happens. That's when you can take advantage of compounding interest, and that is when you can almost guarantee that the market will be higher. So, what is a broad market tracking ETF? This is an exchange traded fund. So when we talk about investing in the stock market, it doesn't necessarily mean picking individual stocks, although you can do that, and that is topic for another video. For most people who want to set it and forget it, you have to have some sort of market tracking fund. Now, the good ones, in my opinion, are QQQ. That is an excellent one. It's been around for a long time. The SPY is also an excellent one and has been around for a long time. Basically, something that tracks the S&P 500, which are the 500 largest companies on the U.S. stock exchange. Okay, in the U.S. stock market. So these are the 500 largest companies, and they are adjusted periodically. So the beautiful thing about this is that diversification is built in. So if one company or two companies or 10 companies or 20 companies suffer, you have a basket of 500 of the largest companies to spread out or to diversify that risk. This is very important because when we're looking to retire as a millionaire, that is a lot different than trying to become a millionaire next year. And the strategies are much different. If someone has a dead set that they want to become a millionaire next year, your strategies are going to look a lot different and you're going to have to take a lot more risk. But if you're looking to become a millionaire at retirement, in 20 or 30 or 40 years, your time frame becomes your friend, and you want diversification to spread risk around. And then you want to let compounding interest do its thing, because that's the beautiful thing about the stock market, is that returns tend to compound. So if you don't touch these investments and you let them compound at 7 or 8 or 9% every single year, you will most likely retire a millionaire. So that is the first one. It is a broad-based market tracking fund. Everyone should have one, in my opinion, and it should make up the bulk of your portfolio together with many other ETFs, sector ETFs, etc. Again, topic for another video. The next thing that we must include, or that we should include, is some portion of bonds. Now, you usually hear about this, and you hear about stocks and bonds, stocks and bonds. What stocks do is, again, they lower the overall risk of a portfolio, because stocks in general tend to be less risky. And when we're talking about U.S. government-backed Treasury bonds, bonds are less risky than stocks. And most people will say they are near zero risk. Now, of course, there is always risk in every investment. But when you have the U.S. government backing a Treasury bond, it tends to be less risky than stocks. Now, here's the thing about bonds. Bonds do not return as much as stocks do on a year-to-year basis, all right? But the return is near guaranteed. So you are getting less yield, but you are getting closer to guaranteed returns. Of course, there's risk in everything. Now, here's the thing also with bonds. The younger that you are, the general consensus in the finance world is the less bonds you should have. As you approach retirement, you should increase your bond allocation and decrease your stock allocation. That is because as you approach retirement, you want to take less and less risk, because you're getting closer and closer to the time that you need to withdraw that money. So if you're 60 and you're about to retire and you have 90% of your money invested in the stock market, and the next year the stock market crashes, that can be detrimental to you. But if you're 28 or 35 and the next year the stock market crashes, that doesn't matter, because you are still 20 or 30 years away from your retirement. So that is why bond allocation tends to increase as you approach retirement. So far we have stocks, and I don't want to drag this video out too long. I just want to give you the 3 simple investments that you can use to guarantee, or very close to guarantee, retiring as a millionaire. The first is stocks, and most likely ETFs, and most likely a large portion of that in a market tracking fund. And I know this isn't sexy advice. I know that there are way more fun videos on here, but this is the shit that matters. This is the stuff that matters and that affects your life in 20 or 30 years. And here's the thing, time will tick on, and eventually you will be close to retirement. That is a guarantee, all right? So stocks, ETFs, bonds, bond allocation should increase as you age, or as you approach retirement, okay? Because you want it less and less risky as time moves on. Now, the next one that might piss a little bit, or might piss some people off, but I'm going to say it anyway. The third and final investment that you need to make at some point in your life is real estate. Now, I understand right now that real estate seems unachievable to most people. I get it. I understand that most in the most large metropolitan areas, real estate has become so expensive and unaffordable that most people just do not feel like they are able to buy into real estate. I understand that. That is the fact of the matter, and those are just the facts. At the end of the day, it doesn't change that we should still pursue and that we should strive to eventually hold real estate in our investment portfolio. If you look at the number one driver in wealth and millionaires, it's going to be very clearly either the stock market or real estate. Those are the 2 top drivers of wealth in this nation. That is just the facts. So no matter how difficult it is, no matter how hard it is, we do have to strive for real estate ownership. That can be in the form of a rental property. That can be in the form of a personal residence, because you have to understand that real estate appreciates, and that you're talking with the numbers are so large, and then when you throw in leverage on top of that, your return on investment is high. And on top of that, since real estate is usually the largest purchase that any of us ever make, the appreciation over time can be hundreds upon hundreds of thousands of dollars. And not only that, as you age, okay, as you approach retirement, you're let's say you're 20 or 30 and you have children and you need a 4-bedroom house. As you age, now you're 50, now you're 60, now your kids move out, now you're 65, now you're pushing retirement. That asset that you bought, let's say nowadays for $400,000, in 30 or 40 years might be worth close to $1 million or more. Now, what the beautiful thing about that is you can, of course, you can do reverse mortgages, you can pull equity, or you can sell your property and you can downsize, because as you age, the requirement for that amount of space usually decreases. So if before you needed a 2,500 square foot house because you had 2 children, and now as you approach retirement, those children move out, you can downsize and you can use the proceeds of the sale of that property to fuel and fund your retirement. So before you need 2,500 square feet, now it might just be you and your wife in your golden years, and you might only need a condo, or you might only need a 1-bedroom apartment, or you might need a tiny house, or you might just need a 800 square foot house in a different state that's a lot cheaper. There are so many options, but if we don't plan for our retirement now, those options won't be available to us in 30 or 40 years. And real estate is a huge portion of that, whether we like it or not. That is the facts. And real estate appreciation is what makes a lot of the wealth in this country. Don't shoot the messenger. I'm not saying that the game is fair. I'm not saying that the game is right. What I'm here is to tell you the game that we're playing. And a lot of times, I always say this, we're not here to change the game. We're here to get good at playing it, because this is the game that we are given. This is what society is. And yes, we can argue for a better future. Yes, we can push for a better future. But until that changes, this is what we are living in. So the 3 major things that you need to do to get close to guaranteeing retiring with millions are ETFs primarily, market tracking ETFs primarily. Now, I'm not here to tell you how much you should invest. I'm not here to tell you if you should invest on a weekly, on a monthly, or on a yearly basis. What I'm here to tell you is that you need to try your best to invest as much as you possibly can, as much as you possibly can afford, because the more that you can invest in these assets, the more likely you are to retire a millionaire. Everyone's situation is different. Some people earn $20,000 a year. Some people earn $200,000 a year. Everyone's situation is different. Some people have kids that they're putting through college. Some people don't. I'm not here again to tell you that life is fair for everyone. What I'm here to tell you is to give you facts so you can use them as best as you can in your life. Stock market, bonds, and real estate have always made the backbone of wealth creation in this nation, or for a very long time they have. That is the fact of the matter. There are so many other alternative investments nowadays. Cryptocurrency, Forex, wine, fine art. You can invest in anything nowadays. The fact of the matter is those 3 main investments and assets should make the core of most people's portfolios. I hope this video was informative. I hope I didn't piss too many people off. Like I said, I'm just a messenger. I think that life is unfair. Trust me, I get it. I think that life is not fair. I get that. And I want to push for a better future. And we collectively, as a nation and as the people of Earth, need to push for a better future for everybody. But right now, money is a thing. Right now, money fuels a better life or a worse life. That is just the fact of the matter. And right now, if you are able, you need to try and pursue a better life for yourself through investing in things that matter. And those 3 are probably the most important. I hope this video was informative. I hope I didn't drag this out too long. I hope I gave you something. I hope you learned from this. This is a brand new YouTube channel. So all I ask in return is if you could at least consider subscribing. It helps the channel tremendously. Finance and personal finance are things that I am very, very passionate about, and I want to share them with you for many, many more years. So if you want to be along and part of the journey, please consider subscribing. Please turn on the bell notification so you don't miss the next video. I love this stuff. I love being able to live in a day and age where I can share this information with you guys. And one last thing before I wrap this up. I do not have a chip on my shoulder. I do not think I'm smarter than other people. I do not think I'm smarter or I'm the smartest person in the room. There are people watching this right now, you are probably smarter than me. And there are people watching this right now that are 5-10 times smarter than I am. So I always say, it is not about me giving you information. It is an exchange of information. This channel is a conversation, and I want to learn as much as I give. I want to learn from you just as much. So if you have different opinions, if you disagree with me in any sort of way, or if you want to add to the conversation, I do not have a chip on my shoulder, and I don't want to, think that I'm the best. I want to learn from you. So please feel free to leave that in the comments. I always take as much as I can out of these videos as I put in, And this channel will always be a conversation. So with that said, I hope this video was helpful. Again, please consider subscribing if you haven't already. And I will see you in the next video where we talk about some personal finance or economics or real estate or the stock market, some subject that covers the subject matter that I love. Anyways, I hope you have a great rest of your day, a great rest of your week, and I will see you in the next video.